Okay guys, so it is Sunday and it has been a very boring trading week. I didn't have any setups, so I have no content to show you about a weekly breakdown. So I'm going to ask some commonly asked Forex questions. I put up a questions thing on my Instagram and you guys sent in some questions. So I'm going to answer ones that I do see crop up quite a few times. So we're going to start with a very simple one. How do you handle over trading, and do you recommend prop firm or personal capital? So we're going to firstly start with the over trading one. I give this answer a lot to people in my mentorship group. People, especially beginner traders, struggle massively with wanting to be in trades. They want to basically see profit go up and down on their screen, and they think that if they're not trading, then they're missing out on making profits. Once you realize that this is not the case and more trades don't equal more profits, then your life will be so much easier. People often message me saying, how many trades do you send in your Telegram group? Do you trade daily? And I'll be like, I don't trade daily. I usually have maybe 2 or 3 setups per week. They're like, oh, why don't you trade daily? Don't you make more profit? And this is kind of what's reinforced by social media. Traders are posting their trades every single day. They're trading the lower time frames. They're scalping, trying to make quick profits. And people want to follow traders that are constantly showing results, every single day. And they see that other people as making less profit because they trade less. The way that I put it and the way that I make myself not overtrade is just remember the plan. If you're backtesting and you have created a plan based on a profitable trading strategy, you would have no reason to overtrade. If you have a checklist next to your trading setup or that pops up on your screen when you are journaling that says you need these 5 things to enter a trade, and if you can't tick all of those 5 things, do not enter the trade. It's literally that simple, but it all comes down to discipline. If you are not a disciplined person, you will not be able to stop overtrading. If you are not a patient person, you will struggle with overtrading. So if you don't have discipline, you don't have patience, then you either have to quit trading or develop discipline and patience to stop your overtrading. And the second part of the question, do you recommend prop firm capital or personal capital? The answer is both. You don't want to be the type of person who can only trade with prop firms. And you also don't want to be the type of person that can only trade with your personal money. If I had to pick one of the two, I would pick only being able to trade with personal money, because nothing can happen to that money. That money is 100% yours. Any profit you make is yours. You can take it out at any time. You don't have any drawdown restrictions or profit targets. That money is yours. The downside is most people don't have the capital to make enough profit from your personal account. So being able to utilize both with different trading styles can be very beneficial. The best path to go down is using your prop firm capital and your profits to fund your personal account. And if you can grow both alongside each other, then that is a win-win scenario. But don't just focus on one, because you don't want to trade with prop firms for many years. They have a massive regulation change, or they shut down the ones you've taken ages to actually get funded with. You're left with no funded accounts, and you have no personal account experience trading with live money. That is the worst case scenario, basically. The next question, if you had to start over, what advice would you give yourself? This one, I would probably say, stop trying to trade. Stop trying to make money. When I stopped trying to make money and focused just on my trading results and just focusing on developing a perfect strategy, and not perfect as in 100% win rate, but as perfect as I can get it, that was when my trading went through the roof. As we all do when we start trading, we think it's a get rich quick scheme. We want to get rich quick. We don't want to wait years before we make millions. That's just how it goes. But if you are early in your journey, then you definitely have a chance to shift to the other side and realize, if I want to make these millions, maybe I just need to extend the time horizon. Maybe if I target building this account up and compounding it over the next 10 years or 20 years rather than the next 1 or 2 years. Because doing it in 1 or 2 years from zero is very difficult. And if it was that easy, then everybody would do it. But over the next 10 to 20 years, it's definitely more viable. So maybe that is what you should focus on, focusing on the long term, focusing on making money long term, and developing a strategy that can work in different trading conditions and not just one that you've backtested it on. That is what I would focus on if I started from scratch today. So moving on to the next question, and that is, Has anyone recently passed FTMO with your Telegram trades? And I will put up on the screen some testimonials from the Telegram group, but you shouldn't go into something expecting to pass. Every trader is going to lose, every trader is going to win. I haven't had any losing months this year from the Telegram group, but I don't want people buying it to then think, oh, in a few weeks I'll be FTMO funded because these people did it previously. And because I obviously pass challenges with the trades I send in a group too. But I don't want people to join for that reason. You know, I give market breakdowns, I share the analysis, how I'm actually taking the trades on, but it's not like a signals where I'm like, buy here, close here, and that's it. Because that would be stupid and you wouldn't learn anything. That's just basically how I see it. Next question, are 2 break-even months normal? Had a really good January, but March and February I'm break even. This is totally normal. People have this idea that if a month isn't ending in good profit, then it is an unsuccessful month. You kind of need to realize that you can make money over a year, but it doesn't have to be every single month making the same amount of profit. You can have losing months, you can have break-even months, you can have months where you're maybe slightly in profit, but then you will also have those months where you win big. But what you don't want is months where you lose big. That is never ideal. Losing big is never something that you should want from your strategy. So you either win big, lose small, or win small or make it break even basically. Those are the 3 outcomes that you should have from your trading. Lose big should never be an outcome. So I see break even trading or break even months as totally normal. I'm literally testing a new strategy right now and I've had a break even month. Do I think that strategy is not ready for live markets now? Of course not. Out of 12 months in a year, you're going to have differing market conditions. So you shouldn't expect every single month to be the same. You shouldn't expect every single month to be tons of profit. That's just not a realistic expectation to go into the markets with. If you've had a good 2 months or a good month, then don't expect it to continue forever. You might have a break-even month next, you might have a losing month next. That's just how it works. Next question, why are your trade entries always on the 15-minute time frame? The reason for this is, from my testing, 15-minute time frame is the best for me to trade with my specific strategy. I'm not saying it could be for yours too, but the way I trade, it is working perfectly. And it also fits how I want to trade. I don't want to be trying to trade on the 1-minute time frame and I have to sit there for hours staring at the screens, basically staring at the charts all day, looking and not wanting to miss my setup. That's not what I want. I want to have a few hours of a time window that I can enter a trade in, and then with the 15-minute time frame, I can see basically an hour or so in advance if there's going to be a trade setup. So it gives me a lot of freedom in my life, it gives me a lot of freedom with my trading, and it doesn't mean that I'm stuck at my setup for hours and hours and hours and hours every single day. Let's say the 1 minute could be more profitable. You know, that is something that could happen, but would I want to trade it? Absolutely not. I would never really go super low on time frames. I feel like higher time frames are usually more profitable. That's what I've seen from people I know. They've had more success on the higher time frames. I feel like it cuts out a lot of noise. Obviously, I'm not saying 15-minute time frame is a high time frame because it's not really a high time frame. I would say 4 hour or 1 hour and above maybe is classed as higher in my opinion. But any lower than 15, I feel like there's a lot of noise and you can get confused with market structure and everything if you've not properly tested your strategy, that is. And the last question of the video, Excel or FX replay? And I'm assuming you're asking about backtesting, and the way I backtest is different for each individual thing I'm testing. If I'm just testing a strategy, I've written down a small plan and I just want to test to see if it works. If it's something I can improve on, then I would just go FX replay and just trade, just like that. I'll trade for 2 or 3 years, see how it performs basically, and then I'll go from there. Then I would do individual testing using Excel. I'll still use the FX replay platform, but I will then use Excel to collect my data. So if I'm testing risk to rewards or I'm testing size of candles or different volumes, these are things that you have to collect yourself. Not a lot of softwares actually give you the data for these sort of things, especially if you are testing something that not many people test. I will have to use Excel. What I often do is I export my FX replay previous trades into an Excel spreadsheet, and then you can go through all the data from there, or you can then import it to Edgewonk or a backtesting or a journal software to see a lot more data. That is what I've been doing for my breakout strategy, my New York breakout strategy, the series that I've been posting on my channel, posting it on my second channel from next week. And I've been using FX Replay into Edgewonk. Gives me a good amount of data. If you're trading different sessions, it can also be great as well. And different pairs too. Obviously FX Replay is really good for backtesting, collecting data, but Edgewonk gives you certain data that I feel like FX Replay doesn't. So I use both in combination, and I also use Excel for targeted testing. So testing individual things that aren't collected elsewhere. So if you guys did enjoy, be sure to comment down below any questions that you do have, and I'll try to reply to as many as possible. I'll catch you guys next time.